anytime I make a distribution as the sponsor to your account, it needs to go to your IRA account. It can't go to your personal account. Once it starts going to your personal account, now your IRA is at risk. Hello and welcome to Pillars of Wealth Creation, where we talk about creating financial success with a special focus on business and real estate. I'm your host, Todd Dexheimer. Now, let's get to it. Hello, welcome back to Pillars of Wealth Creation. I'm your host, Todd Dexheimer. With me, as always, on these Wednesdays, we got Matt Jones. Matt, how are you doing today?
I'm doing excellent. How about you, Todd?
I'm doing great, man. Just got back yesterday from Memphis, trying to kick some butts, getting our contractors in gear, and making sure they get a bunch of units done. We've got a big push on 44 units that we're trying to have them complete before the end of this month, and an additional 14 units after that we're trying to have them complete no later than September 15th. So a huge push on a bunch of units and just trying to get there and make sure everything is in line, in order, and they understand, truly understand that the importance of getting these units completed. So
very aggressive. Do you think they'll be able to finish?
Yeah, I sure hope so. I'm not holding my breath. They've promised deadline dates before and seem to not enjoy hitting them. So I'm not going to hold my breath that they're going to get them done, but that's why we're showing up so often. I showed up 2 or 3 weeks ago. My business partner showed up 2 weeks ago. Then I showed up again, and my other business partner is going to be showing up next week. And so we're just continuing to hammer this and trying to get these units completed and make sure they understand the importance of getting the units completed in order to, I mean, we just, here's the thing, Matt. When you have any renovation project, whether it's big or small, what you have to understand as a investor is every month that unit sits vacant, every day that unit sits vacant, you're losing money. And it's not just the expense, right? So we've got property taxes, we've got insurance, we've got, heating and cooling costs, we've got, lights and outlets and stuff like that. So we've maintenance and all that kind of stuff. So we got costs, right? And we got our mortgage. So we're losing money because that's not occupied. And our expenses are not necessarily fixed, but still pretty close, right? Just because a unit's vacant doesn't mean we're saving a ton of money. We save a little bit on electricity and gas, and the maintenance guy doesn't have to go there and do any maintenance on that unit because nobody's using it, right? But for the most part, we're still spending a lot of money on that unit. And so it's sitting vacant. Well, but what we're also doing is we're missing that income, and that can add up really, really quickly. So if you take our expense and you take our income and you start combining that, and you say, well, this unit sitting vacant, what is that loss? I mean, look, we have a property in Kentucky that we're renovating, and the contractor was supposed to have done by a specific date. They didn't get any of those units done by those dates that they were supposed to get them done. We had 5 leases that tenants walked away from. 5 tenants that walked away. That loss right there was $8,300. Okay?
Ouch.
$8,300. Now, I could have paid $8,300 more dollars to the contractor to get those units done on time, or to a different contractor, right? So I could have hired a different contractor for more money and got those units done on time, in theory, right? You got those units done on time, and I actually would have been ahead of the game, because now that resident is in there. Now I've got occupied. Now we can get onto the next units and start making even more money. So a lot of us want to try to skimp, and we want to get contractors in there that are, we're so worried about the price. I can't spend that money on this renovation. It's going to cost me too much. But what's it really costing you to hire that person? You also have to look at that, because if it takes me 1 month longer, and that's 5 units, that's costing me $8,300 more, or $8,300 in losses. Okay. We got to consider that when we're considering these renovations. So that's what we're thinking about right now. If we don't get these 44 units done by the end of the month, what does that look like? What is that costing us? If it ends up going into September or beyond, like what is that costing us in actual dollars? And it's not just the dollars that it takes to do the construction, it's the dollars and the expenses, the income, and the opportunity loss.
Yeah, with renovating units, it's the same as like flipping houses. The velocity of your progress is what matters most. You know,
100%.
yeah, and luckily for our listeners, we had that recent episode we were talking about construction management. So if anybody wants to listen to that for some more details, they can check that out. So we actually have an event coming up here this coming Monday, August 22nd. For our listeners who are in the Twin Cities, we're going to be having a happy hour networking event at Insight Brewery in Minneapolis, and so I'm really looking forward to that.
Yeah, absolutely. Come on to Insight. It's what would you say, the 22nd at what time?
5:30 p.m.
5:30. Okay, so it starts at 5:30. Come and hang out. We don't have a special presentation or anything. More just a network, get to know each other, talk real estate, talk business, and have a good time.
Very good.
So cool. Matt, what are we covering today?
Today we're going to be talking about using retirement funds to invest in real estate.
Yeah. So, and a lot of people don't even know that they have this capability of using retirement funds. I'm sure most people listening to this do know that, but if you don't, you can actually use retirement funds, 401k funds, IRA funds, and move them into real estate. But there's some like things that you got to think about first. Okay. So we can take those funds, we can move them into real estate. We can be investing in cash flowing real estate. We can diversify our funds. You got these financial planners that are always talking to you about diversification, yet they don't diversify your funds very well because they're still into stocks, bonds, and mutual funds. That's all they're into. So they're not really diversifying your funds as well as you think. They're in different companies, certainly, but they're in still the same basic type. So we're diversifying even more, getting into some real estate, getting into some businesses. You can even do like horses, all kinds of different stuff with your self-directed IRA. But a couple things to think about. First of all, if you're in your current company, all right, let's say you work for, I don't know, Matt, name a company, name a big company, Walmart.
Yeah, Walmart, sure.
Perfect. Say if you're a manager for Walmart, you got this nice 401k, and you've been with Walmart for 15 years, so you've built it up pretty good, but you're still with Walmart. And well, you're likely not going to be able to roll that over into a self-directed IRA in order to buy real estate or invest in real estate. So you have to understand that if you're in your own company, if you're in the same company, there's a good chance you can't roll that over. Now, it's not that you 100% can't, but it's likely that you can't. But if, let's say you were the manager at Walmart and you ended up getting a new job at, Target, now you could likely roll all or some of your IRA that you built up, your 401k that you built up from the time at Walmart. And now you could use that to invest. If you work for yourself, you can get a solo 401k, self-directed. That could be really advantageous as well. So there's lots of options. The other thing to really understand is it's really tough to invest in your own deals with the self-directed IRA or solo 401k, UQRP. Some people, will refer to an UQRP, which is essentially the same qualified retirement plan. Here's the key, it has to be, you cannot be managing the asset. You don't control, you can't really touch the funds within your 401k, right? IRA, whatever. The government won't allow that. If you do touch it, then it it's at risk. So that's the same thing with the investment. If you're fully involved in the success of the investment, if it's all up to you, there's a good chance that that's not a qualified investment. Okay. Now, if you're hiring a third party property management company, if you're very, very, very hands off, then it could qualify. I'm not the person that's going to tell you if it's going to qualify or not. Reach out to a self-directed IRA custodian to understand if that's a qualified investment or not. The best way to know if it's a qualified investment is to say, do I have anything to do with the day-to-day? If I have nothing to do with the day-to-day, then it's likely qualified. If I have zero to do, even if the property manager calls you up and you have to make decisions, it could be putting your investment at risk, right? But if you're investing passively in a syndication, we take self-directed IRA investors all the time. That's qualified. They don't make any decisions. They don't get to make any decisions.
So, how can a person roll over their funds from a regular IRA or regular 401k into a self-directed 401k or IRA?
Yeah, I think the research some of the custodians that are out there. There's Madison Trust, there's Equity Trust, there's New Direction IRA. There's I think Fidelity also has a decent branch. There's quite a few others that I'm missing, but you could just Google self-directed IRA or solo 401k. You'd come up with a pretty good list, or if you know anybody that's done it, or if you're looking for a custodian and you're going to be passively investing, let's say you're passively investing in one of my real estate syndications, you call me up and go, hey, what are the companies out there? And we've got a list of companies that our investors have used in the past, and we can tell you what companies are out there. Now we don't have any true recommendations because we could tell you which ones have been easy to deal with at our end, but we don't know what the investors, necessarily. So there might be some referrals that we can give you. And I'm sure if you're looking at investing in whatever it is, something else, you can get some referrals too. So, yeah, I think it's fairly easy. They'll help you understand too. Can you move your money, right? How easy is it to transfer your money? You want to understand the fees associated. What are they going to charge you for transactions? What are they going to charge you on a monthly fee, if anything? How much is that going to cost? ACH, what are you charging for payment cycle, all that kind of stuff. So what are they doing for reporting? How are they protecting your butt, right? That's the other thing. Like, what do they have in place that helps protect you? You want to make sure whatever qualified intermediary you use, whoever you're using, you feel like they have your best interest at hand, right? They are making sure the documents, the paperwork is set up the correct way. They're going to review the documents to make sure you signed the right way. So I've got a subscription agreement, Matt, and my subscription agreement goes out to everyone and they sign on that subscription agreement. Well, you cannot sign on your own behalf with a self-directed IRA. It has to be, I shouldn't say that. It has to be written the right way. So I can't just sign as Todd Dexheimer. It has to be, let's call it Madison Trust for the benefit of Todd Dexheimer, blah, blah, blah. There's a certain way they want you to sign on that and have everything titled. Are they there for you? Are they making sure that that's done right? Are they able to check over the documents? So those are questions you want to ask. Are you able to check over the documents to make sure we signed on it properly? Are you able to look at the investment to make sure we have a qualified investment? What kind of advice can you give us? There's some companies that are very standoffish. They don't want to tell you anything because they're not legal advisors. There's other companies that are careful, of course, what they say, but they will help you along the way.
Okay.
That's what you want.
So let's say you've got your money into a self-directed IRA and you've found a syndication that you want to invest in. How,
Yeah.
so then you sign all the paperwork. What happens from there? Like, how does it all work?
Yeah. First of all, I would say before you go and find that syndication, you want to make sure your self-directed IRA is at least set up. And that doesn't necessarily have to mean that the money is transferred, but everything's teed up, ready to go, because it does take a while. So make sure you have the custodian picked. Make sure you've had those conversations and understand everything, and set your account up and all that kind of stuff. Make sure you're teed up and ready to go and understand the timeline. So talk to the company about the timelines too. How long will this take? If I got an opportunity that comes up, and I want to invest in it, how long does the entire process take? Make sure you've got a custodian as well. Like, who is actually going to be handling your file, and have the conversation with them. I want to make sure I've got a company that has somebody designated to me. So I don't have to just call this 1-800 number every time and get some random person that I have to try to figure out what's going on. And somebody might give me one answer and then one day and another answer the next day. So let's make sure we got it all set up. If I got an investment, it comes out, I look at it and go, I really like that. I want to invest in that opportunity. It's really as easy as making sure your money's in your account. So getting your money into your account and moving that money into the next account, signing the correct documents the right way, and you're pretty much off to the races. So it's not that challenging once the initial groundwork has been laid.
How long does that groundwork take? Like from
I would say you want to count on, look, it all varies, right? So, but I would say 45 days. Like, just make sure you're prepared. You probably won't need that much time, but just make sure you're prepared.
Okay. Okay, so now you've got everything set up, money's in the self-directed IRA account, and you found a property that, or like a syndication you want to invest in. What's next?
Mm-hmm. Yeah. So again, sign the paperwork, right? Get the paperwork signed. Make sure you specify to whoever's taking your investment that this is a self-directed IRA or this is a solo 401k. Make sure they take them, which most people will, but make sure they take them. Make sure they understand that, and make sure all the information that you enter in to their website, their portal, whatever their tracking system is, make sure it's written the right way. So it can't be Todd Dexheimer. It's got to be, equity trust for the benefit of Todd Dexheimer, IRA, blah, 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 blah. Okay. So it's got to be written the right way. And then when the paperwork comes to sign, make sure, again, that's signed the right way. And then the money is transferred to the investment company. And it's got to get transferred from the IRA custodian to the investment company. So it's not your own cash. You don't wire money out of your own account. It goes from the self-directed IRA company's account into that. And then you're set. And, so this is super important, because if you start getting taxed, right? Because at the end of every year, you get a K1 statement. You're going to get a K1 statement. And that's, if that comes to you personally, Matt, now you're getting taxed, right? Now that's an issue. We want to make sure it's going directly to the self-directed IRA company. Of course, if it's taxes exempt, you won't pay any taxes on it. Now there is potentially some taxes that you would have to pay depending on, there's all kinds of stuff. So you want to talk to your CPA and your custodian about any potential tax implications. So I don't want to tell anybody that there's never can be tax implications, because there can be. And I'm not smart enough, or really, I shouldn't say that. I'm not qualified to tell people legally what's out there. So the payments, the distributions, that's the other important thing. You've got to make sure you've got the correct account information, all that kind of stuff that's directed to your self-directed IRA, because anytime I make a distribution as the sponsor to your account, it needs to go to your IRA account. It can't go to your personal account. Once it starts going to your personal account, now your IRA is at risk. So it needs to go to your IRA account directly and not to you and then to your IRA. You cannot touch that money.
All right. So all the profits have to go to that self-directed IRA
All
account.
the profits. Yep. Yeah. So why would you do it? Why would you not do it? I think that's really important. Matt, for me, like, first of all, if I've got cash and I'm looking to, especially if I'm looking to lessen my tax burden, I'm going to use cash first. Cash is king. I would use that before my self-directed IRA funds all day. Okay. So, but let's say you don't have the cash and you've got all these IRA funds sitting there and you're like, man, I got all these IRA funds sitting here. They're just, I want to diversify a little bit. I don't like that they're all just sitting in stocks, bonds, and mutual funds, and some bean counter is looking at them. I want to move my money. So big pro is you have control. You can choose what investment you want to invest in and how much you want to invest in. That's very huge. And of course, you can diversify as little or as much as you want in non-traditional assets, right? So that's definitely huge. That's obviously a huge pro. You have a certain amount of control, but you just want to make sure again that you understand that control. You can't. You can move that money back into a traditional IRA too if you want to. Eventually, you can move more money, but again, I don't want to tell you exactly the rules there because, quite frankly, I don't know them 100%. So you want to make sure you're talking with qualified people on it.
So I'm curious with the profits, like when you start, getting the payouts into your self-directed IRA account, are they just sitting there, or like, can you redeploy those right away?
Yeah, certainly. It really depends on how active you want to be in your IRA investments. Okay, so let's say you get a $5,000 distribution, right? That money could just sit there if you wanted it to, or certainly it could be reinvested in other assets, in other real estate. If there's smaller investments you can make, it can go to uh, buy various different things. I mean, there's a lot of investments out there that you can buy with less than $5,000. So yeah, you can reinvest it certainly.
Okay. Yeah, I liked your earlier point about using the cash for if you have it available for the investments, because the negative K1 that you can often get that first year is a beautiful thing to
Yeah.
counteract your taxes.
Yeah, that's a big benefit, and that's a big, I would say, negative with using a self-directed IRA is that you can't take those tax losses. So even though you get a K1 at the end of the year and they did a cost segregation study and all that kind of stuff, and now it shows you a negative loss, you invested 100,000, it shows you a negative loss of $60,000. You can't use that against anything, right? That just is non-usable. It's just not usable. So it just sits there, right? Um, so that's definitely a negative. And some other positives, of course, none of us ever want to lose money, and we don't ever want to go bankrupt. But one of the nice things, if you're using self-directed IRA money, if you ever have to file bankruptcy, you've got that $1 million exemption still because the creditors can't, come after that. So you got up to $1 million that are exempt that are in your, self-directed IRA. So that's kind of cool. Well, hopefully that never has to happen, but definitely a benefit. I would say you also have the ability to create much higher, return on your investment, right? It might require a little bit more effort on your end, but if you have that time and energy and want to diversify your funds a little bit better, you can definitely create a lot better returns than traditional stock market, stocks, bonds, mutual funds.
Yeah, so a little bit about myself. I've got this old 401k that I haven't been using for anything. It's still, invested in the stock market, of course, and just been doing terribly. So I really need to roll that over and start using that for real estate, because the people who are in charge of this 401k, they don't give a crap if I make money, because they're still making their fees every
Right.
month.
Right.
Regardless of what else is going on. But if I'm investing in real estate, the sponsor of the syndication cares. Like, they want to do well by me as their investor.
Yeah. And this isn't to bash, people that are financial advisors. I think there's some very good financial advisors that truly care about people and are truly looking out for them and trying to make them the most amount of money. There's a lot of bad financial advisors out there as well, that don't care about the people they're serving. And the only thing they're looking to do is make money. There's certainly plenty of those, but regardless whether you are a big stock guy or a big real estate guy, the proof is kind of in the pudding that stocks overall have lower returns and higher risk than real estate. And it's just that the numbers are out there, and it's been like that for a long time. And so if you want to throw some money into real estate and make potentially better returns with lower risk, that self-directed IRA allows you to do that. And it allows you to put more risk out there as well and invest in various other things. So it's not that it's just real estate with your self-directed IRA. There's a lot of other opportunities out there that you can direct your money to. Startup companies, and like I said, horses, and just all kinds of stuff. Now there's certain things that are not allowed. I don't believe you can invest in like a hemp farm. There's various other things that you can't invest in, anything with gambling. So there's a whole line of items you can't, but there's plenty of things that you can invest in and be successful with outside of the traditional IRA. So that's a huge pro. Matt, what are some, let's talk about some negatives, because it's certainly not all roses. For me, probably the biggest negative is the setup, the the complications of there's I guess this is a long answer, but paperwork and fees. So there's a lot of paperwork, and there's a lot of I would call it a lot of fees, because I would actually say the fees in a traditional IRA are pretty heavy as well. But there's fees, and there's lots of paperwork. There's setup. Takes a while. You have to try to get to understand what the regulations are. There's a lot of regulations. So what's qualified, what's not qualified. You want to understand all that stuff. So I would say just the transition from your traditional IRA, where it's super easy. It's such a big industry, the traditional IRA and 401k. It's such a huge industry that everything is just pretty streamlined. Where the self-directed IRA, solo 401k, is a very, very small industry. And so it's just much more, I guess, complicated to get things set up. It takes a little bit longer. It's just certainly a lot more difficult. I would say it's also easier to become non-compliant, and that's because of the what I was just saying, right? And so if you become non-compliant, now you're subject to taxes. So that's definitely a risk that you want to make sure you're avoiding, right? So by being compliant, so we want to do everything we can to stay compliant, but that just takes a little bit more work on your part to make sure that you're staying compliant, because it is self-directed, right? And so you do have to know, you do have to learn. So it's not just that you can sit back and let some financial advisor do everything with your money. You have to understand the rules, and you're responsible for them. So you do put yourself a little bit at jeopardy if you don't do it right.
Yeah, so a lot more effort. Yeah, it's then investing in a regular 401k, a lot more effort than investing with cash into real estate. But if you got that money that, you're not happy with how it's performing, then you can take control of it and, you become your own destiny with it.
Yep. Yep. I would say it's certainly not likely as liquid, because you're probably investing in assets that are just not nearly as liquid. So for instance, real estate, if you're investing in one of my syndications and you invest $50,000 from your self-directed IRA, we're not moving that money for 3 to 5 to maybe even 7 years. That money is locked up. Now you do get distributions and that, depending on the business plan, those distributions might flow into you pretty immediately and you can reinvest those funds. But the $50,000 is not nearly as liquid as if you invest in the stock market, right? So if that's definitely a pro of the stock market, is I can get in and out of that same investment within an hour or less. I can be in, out, I could be trading. There's day traders all over there. It's very, very liquid. We can move our money quickly.
Okay. Any other negatives?
Yeah, I'd say the maybe the last con, and there's probably others. But you need more money to have to put it into a self-directed IRA, to want to put it in a self-directed IRA, right? If you have 401k or IRA, that's 15, 20,000, it's not worth moving it. I would say at least 50,000, but I would hinge closer to 100,000, but I would say $50,000 probably makes sense. You could do it, but much less than that, there's just not a lot of opportunities out there for you, and so it's probably not worth moving that money for $10,000 or $15,000, something like that.
Well, did we cover everything, or are there some more things that we missed?
Yeah, I mean, we covered quite a bit. I think if look, it's a great opportunity. If you've got IRA funds that are sitting there and you're going, what should I do with this stuff? I don't like what my 401k or IRA is doing. Look at the other opportunities out there and decide if it's right for you, or if you have a loved one, same thing, or a friend or family member that has an IRA and they're complaining about it, 401k, they're complaining about it. This is an opportunity for them to potentially take some of that money and move it into a non-traditional asset and do really well with their investment.
Very good. Well, it's good that there's this option, because before I came to real estate, I didn't even realize that you could do this. I think a lot of people don't.
It was actually recently under attack. They wanted to eliminate it. Of course, Wall Street really would love to eliminate it because it takes money away from them. Mm-hmm. So the more this becomes popular, the more Wall Street will attack it and try to eliminate it. So we thought there was a good chance it was going to get eliminated. Of course, it got struck down, which is great, but thought there was a good chance it was going to get eliminated here. I think it was within the last year. So, all right, Matt, that's all I got. Self-directed IRA, learn more. And again, if you want to invest in one of our deals, I'm happy to point you to a couple of the custodians that our investors have used. But otherwise, just a quick Google search should get you some good information.
All right. Very good.
All right. Well, you have a fantastic rest of the day. Make every day Saturday.
Thanks. You too.
Hey, thanks so much for listening. I appreciate you being a loyal listener. I would love to have you go on to our Facebook page and subscribe, give us a thumbs up, go on to iTunes or wherever you listen and give us a rating and review. Don't forget to subscribe. Your rating and review just helps us push this out to more and more people and continue to grow our audience and hopefully positively affect a ton of people out there that really need this and want this. So the other thing I've got for you is a free ebook on my website. So go on to venturedproperties.com, and download our free ebook on real estate and on syndication. And I've got some data points in there, some really good stuff for you. So I'd love to have you take a look at that. It's free. I'm not expecting anything from it. And also, look, if you want some help in multifamily, want some help learning, growing, getting your business off the ground, I would love to talk to you about what it would look like to work with me potentially and see if that's a good fit. So you can go to coachwithdex.com and check that out. And we can definitely have a call. Thanks a lot for listening. You make it a fantastic rest of the day. I'll catch you on the next episode.